Hey guys, what's up? How's it going? Welcome back for another video update of our Canadian-based dividend growth stock portfolio. So like usual in today's video, I'll be giving you guys a deep dive inside of our stock portfolios. I'll show you guys how our stocks have been doing, I'll show you guys the dividends we got, and I'll show you guys what stocks I've been buying for the month as well as for today. So the first thing we'll do is do a quick little portfolio update, and I'll show you guys how our stocks have been doing over the past little while since the market has been dipping a little bit over the past couple weeks. So the first thing we're going to cover really quickly is going to be the 1 month return of the TSX, since we did see the markets dip quite a bit over the past little while. Now here, once again, we're going to look at the 30-day return. So this is just the Canadian markets, and we'll cover the American markets or the US markets in just a second here. But we can see some of the markets in the Canadian markets have done well, like oil and gas and stuff like that. But that's pretty much the exception to things. Most things are in the red, and we've seen a fairly steady decline over the past week or two into the market. Some days are up, some days are down. Like today we have a bit of a day where things bounced up a little bit, but overall the markets are still down. But if we zoom out, it's actually not too bad. It really just depends on what stocks you buy and whatnot. But the 1 month return, we do see quite a bit of red across the board. I'm going to go up here and look at the last 7 days as well. I'm going to see more or less the same. Some stocks kind of like popping up a little bit more, but nonetheless it's still quite a bit of red. And then today, like I mentioned, we did have a bit of a green day, so it does look like things are going up a little bit. But once again, things have been kind of up and down for the most part over the past little while, so it's hard to really say what's going on. But nonetheless, just like most of the time, guys, just keep with it, keep investing in your stocks. And we're going to kind of zoom out a little bit and take a peek at what things are actually looking at in terms of total return for the year. So I'm going to use the S&P 500 VFE index, which is the ETF that I buy inside my portfolio for American stocks, as an example. The Canadian markets overall year to date is down quite a bit, like a couple percentages, nothing crazy. Depends on the funds you guys are buying, but you're going to probably see a little bit of a dip there. Nothing crazy, no like crash or nothing. But again, it's always important to zoom out and take a peek at the year to date to kind of see how things have been going. Because if you've been following the markets over the past month or so, it's a lot of doom and gloom, right? But if we zoom out over the past month, VFE is down about -3%. I'm going to go back to the year-to-date chart, and you guys can see it's been a pretty steady decrease, and the Canadian markets have been, more or less trading flat with a little bit of a decrease since the year-to-date, right? So Canadian markets definitely have seen not as much of a recovery, but the American markets have actually still been doing quite well. We're still up 11% year-to-date. So amongst all the doom and gloom and all the stuff that people are saying about, the market's going to crash and now is not a good time to buy the markets, yada yada. We know the same old thing. It's always going on and on. We know that if you guys just stay steady with things and you're buying, good quality market ETFs, or you're just buying good quality companies, you're going to do well in the long run. So I just want to show you guys, if you guys are just staying the course, keep buying those ETFs, keep buying those good quality stocks, and you guys will make it out fine. And at this point in the video, we're going to do a quick little portfolio update so you guys can see how our stocks and ETFs are doing inside our different accounts here. I'm going to start with my Wealthsimple trade account. This is going to be the main thing I'm going to focus on in today's video. Going to be my different portfolios, but I will zoom out and I will show you guys our entire stock portfolio as we go through this little update here. So really quickly here, we have the watch list. So these are different ETFs that I follow. So VFE is my main US index ETF. It's up 0.68% today. VDY is the Vanguard FTSE Canadian High Dividend Yield ETF. It's my main ETF for Canadian stocks. It's up 0.75% today. And then HYLD is one of the cover call ETFs I have. So obviously they're going to just kind of follow the market. But we have 3 different accounts here, a total of $115,000 on Wealthsimple Trade, and our portfolio has dipped quite a bit. If you guys have watched my previous videos, that number's probably around like 117 it was at for a little while there, and we've seen a little bit of a dip, but that's just the way things have been going this year. But nonetheless, we're just staying the course, reinvesting our dividends, and putting more deposits inside of our account. We have the personal account, which is my old personal account that's kind of basically just been sitting around doing its thing. This will eventually get put into TFSAs or the RRSP going towards the end of the year. Then we have our RRSP, which is our Canadian Growth Based Fund. This portfolio, I guess, is the first one we'll start off with. So year to date, the RRSP is up 2%. We've seen a little bit of a gain, and this is our dividend growth stocks. And we started this portfolio in July 16th of 2023, so about a month or two ago. It's not super old, and this is all Canadian dividend growth based stocks. So Alimentation Couche-Tard, CNQ, CNR, Dollarama, and TD stocks. So once again, just good quality stocks here. This is my attempt at kind of making a more growth based portfolio and buying my own stocks. It's going to be a small account since I'm more focused on our TFSAs and not so much our RRSPs. Especially since RSPs, like retirement's a long ways away, so I'm not too worried about it. It's going to be more of a long-term play, but we can see here that even though the markets have dipped and done their own thing, if you guys have a nice diversified portfolio with different sectors and you pick good quality companies, there are some companies that can perform well. Like Alimentation Couche-Tard has actually done well this year. CNQ has done well this year. you know, Dollarama has done well. So a nice diversified portfolio will help you kind of balance things out, and you can take, you know, a crappy year in the markets and actually maybe do okay with it. So that's why diversification matters a lot. And then we have the good old fashioned TFSA, which is our biggest account here at Wealthsimple Trade. Currently all time it is up 13% inside of a portfolio, so it's my biggest account. The 1 day return is up 1% today. The 1 week return is down -2%. So it's dipped quite a bit, and mostly because we've seen a dip in the Canadian markets, but as well as the American markets. This fund is very much focused on the American markets. So we did see that dip in the US markets. So, you know, obviously that's going to have a big factor in that. So over the 1 month return, it is down -4%. But the 1 year return, it's still up 12%. And then all time it's up 13%. So it's been doing pretty solid. And we did have some stocks to buy and some dividends, which I will show you guys later on in the video. But here's the stocks. So mostly a nice mixture here, but our main focus is here, if we scroll down here to the bottom, are going to be the big ETFs. So the main ones like VFE here, which is about a fairly significant chunk of the portfolio at over $50,000, and then VDY, which is $27,000, is going to be our Canadian holdings. So once again, very much focused on the US market inside the TFSA for that tax-free growth, and then the Canadian markets for dividends and growth as well, and just for diversification purposes, right? And then we have our individual stocks and some different income funds and stuff like that, which hold up a small percentage of the portfolio. But this really is a mixture portfolio, but heavy emphasis on growth in the American stock market. Lastly, guys, we'll do a quick little update on all of our accounts. So here's the bird eye picture. You guys can see all of our accounts we hold, or at least the bulk of them. We do have a few accounts that aren't in here, but they're just little small mini ones, so they're nothing significant. But we have my personal account, we have my TFSA, my fiance's TFSA, and then my RRSP. So the fiance's TFSA is the one we haven't covered. So that's about $22,000. And we can see our contributions here. So for September, we deposited or contributed about $964 inside of our accounts. And then here are our total holdings. So we have $137,000 in total holdings in Canadian dollars inside our portfolios. So once again, it's kind of been up and down, but nonetheless, you know, if we look at the beginning of the year, the beginning of January 2023, we did have a portfolio value of about actually $111,000. So even though the markets have been up and down and kind of doing whatever kind of thing, our portfolio has grown significantly. A lot of that is our own deposits. A lot of that is dividends, dividend growth, and just the markets, you know, having a good positive return, right? Having a good chunk in the American markets, you know, definitely helped us out this year. And that's a big chunk of the portfolio. So once again, guys, just a quick little bird's eye view of all of our stocks inside of our portfolios. So I have $50 inside my RRSP that I'm going to be investing into stocks in today's video. I'll also give you guys a quick little update on the stocks we recently bought inside my portfolio. We did put about $500 inside my fiance's TFSA recently, and we bought some ETFs with her portfolio. So just pretty simple stuff. And for most of the month, we've just been buying our current holdings. I haven't really had time to dive in to research and look at more stocks to add inside the RSP account. So once again, just kind of keeping it simple, just like most of the time we do around here. So I've kind of just been buying the stocks we currently hold, and I'm really just looking at building up the RSP to kind of have like equal holdings throughout our different stocks. So, you know, in today's video, I'm probably going to be buying some CNQ, some CNR, and then if we have some extra cash, we'll put it into TD, and hopefully want to bring up all these holdings to be about $150 each. But nonetheless, we're not doing anything crazy, no new buys for the month. Like I said, I took a little bit of time off this month, and it's been a pretty laid back month. So, you know, I just want to kind of keep buying the stocks we currently have. I do like to set things up so that, you know, we're buying stocks that we don't have to worry about, like, you know, do I buy it now? Do I buy it when the market's up? Do I buy it when the market's down? Other than like extreme exceptions, we can always buy them because they're always good quality companies. We're buying the markets and ETFs, so we don't have to worry about with that. But when you buy it, it's just really set up to keep things simple, to keep things fundamentally sound, and we don't have to worry too much about when we want to buy stocks. But of course, you know, if we log in here and we see that TD stock is down a little bit, or CNR stock is down a little bit, or it's dipped a little bit, you know, of course you could buy the stock and take advantage of that. So that's something you guys can do as well. So here's a quick update of the stocks that I bought inside my own personal portfolio. Once again, this doesn't include my fiance's portfolio as well as some other smaller accounts, but this is just my main Wealthsimple Trade account. But once again, mostly just buying our main ETFs. Some of these are inside my TFSA, some of these are inside my RSP. If you guys want to see all the stocks I buy, you guys want to see my entire portfolio, be sure to check out Blossom Social. There's a link to the app inside of the description of today's video. You guys can sign up for free, and you guys can see all my portfolios. You can see all my stocks. You can see everything I buy from there. It's 100% free to sign up. It's a cool little app, so check it out if you guys want. But that's a good option if you guys want to kind of do a bit of a deep dive. But I'm going to zoom out here and kind of take a quick peek at, let's take a quick peek at September. You guys can see all the different stocks we bought. Once again, pretty much been on autopilot for the month, nothing too crazy. I think the one stock we did buy was Dollarama towards the beginning of the month. That was a new stock side of a portfolio, but nonetheless, we've just been adding the same stocks, basically doubling down on things and taking advantage of the dips that are happening in the market. And a quick little update on the dividends. There hasn't been too much dividend activity inside of the account as of late. Our big dividends came up at the beginning of the month, and then I do believe we do have some dividends coming up towards the end of this month, kind of like literally right at the end of the month. So those will get recorded probably in the next video update. But just to give you guys a quick little recap, here's all the dividends from the individual stocks that we have here. And then if we zoom into passive and we take a peek at the dividends, we can see them by a month basis. So August, we've got $321 for dividends. July was a pretty big month, $651. And this is across all of our accounts here. Nice thing about passive is it does report everything here. So we have August, and then September was a bit of a step up from August, and we still have some dividends, like I mentioned, coming in towards the end of this month. So we might hit $400. I'm not too sure. If we do, that's going to be a pretty good month. And then October is going to be obviously another big month because we have our quarterly payments coming in and whatnot. So I'm pretty excited for that. It's going to be a nice big dividend month. But $342 so far for September. Hopefully we hit 400, but if not, it's not a big deal. They'll just be added on to next month. So nonetheless, just a quick little update on the dividend income inside of our portfolios. And the last update I'm going to show you guys is going to be the total return for all of our stocks and portfolios. This is one of the most important things to grasp and understand for all of your accounts. You want to look at the total return of all of your stocks, and I'll show you guys the total return of all of our stocks using Wealthsimple, and then I'm going to show you guys the total return of my stocks using the Wealthsimple Trade app, so you guys can just see how my Wealthsimple Trade accounts have done over the past couple years. But here's all of our accounts in one place. Basically, here's all of our different accounts. This is my fiance's accounts as well as mine. If you guys see the double Wealthsimple symbol here, this basically means that this stock is held in both accounts and it's averaging out kind of thing. So we both hold VFE, we both hold VDY, and we're getting a mix between the two accounts here. So that's going to kind of go in through there, and then I'll show you guys the total return of my own Wealthsimple account using just the stocks I bought. So it's going to obviously change things around when you kind of add both accounts here. But VFE, we have a total return of 8.35%. So this includes dividends. Revenue is going to be your distribution. So this is dividends. The side on the right here is going to be the stock growth. So this is stock appreciation. This is the stock growing over time, 5.85%. And then if we add the $1,570 in dividends, that total return comes up to be 8%. And again, here's the dollar amount. So 3,676 in stock growth. And then if we add on the revenue, we have 5,246. So total return is very important aspect to count, and you always want to add it in, especially when we're talking about dividend stocks. VDY, American Canadian based ETF, is up 12%. So even though the markets have gone up and down and it hasn't been that great, it's still actually doing quite well, seeing us a total return of 12% because those dividends and the growth of those dividends matter. Going down here, we have the US covered call HYLD up currently about 1% inside of our portfolio. So once again, those distributions, the $1,453 makes up for the lack of stock growth from this ETF. And the US markets did get hit. This ETF did get hit quite a bit, and everything's up and down right now. So we'll get those returns over time. TD is another individual stock. Looks like it's not doing so good in terms of stock growth, but if we add its dividend growth, it's actually sitting up at 13%. Couche-Tard as well. Couche-Tard is more of the growth stock. ATD, one of my favorite stocks, up about 34%. Obviously, it doesn't have a big dividend yield or a lot of it does have good dividend growth, but little yield. But we're starting to see that kind of add up, right? Our revenue is only $30, but it's slowly starting to add up to the total return, and that'll take time, obviously. CNR is one of our newer stocks we started investing into. We don't have a lot of money. Obviously, it got hit down quite a bit. And then we have our two stocks actually that are most ones in the red, but these are small holdings. We only hold 1.43% of our portfolio. So I don't like to have too many individual holdings inside my stock because of this whole reason right here is that there's always a chance that these stocks could underperform, or they could go through hardships or different hard things in the market. Might have nothing to do with the company. It could just be interest rates. Nobody can control those, but it can make a company, even a good quality company, struggle, right? So, again, if we look up here, we can see the weighting of each individual stock, and you can see the big ones at the top. So VFE is 48%, VDY is 25%. The reason why is because in an event that an individual stock like AQN or TELUS underperforms, whether it's short term or long term, it's not going to be that significant chunk of our portfolio, right? We're still going to do well overall. So that's the reason there. Next up we have is HDIV, another covered call ETF, sitting at about 1% inside of a portfolio. Once again, very much focused on yield. Going down here we have Loblaw. Loblaw is going to be my ESSOP that I have with my employer. I get a really good match, so that's been doing pretty well, and that's one I've been focusing on as well. I don't need to buy the stock because over time, me buying into the company and then them matching my shares will build that up, and that's about $1,467. So that's, a no-brainer. If you guys can take advantage of company matches or anything like that, you definitely want to do that. Next up we have is our FTN Financial Covered Call Split Corp. This is an experiment by me. I'm kind of dabbling with these split share corp funds. I'm not too sure about them, but we're kind of experimenting with them. Again, such a small amount. It's literally 1% of the portfolio, so we'll see what happens with it. I basically invested it for the passive income and the high yields, but we'll kind of see how it goes. I'm not 100% sold on them, but we'll kind of see how things go. Once again, just testing things out. Fortis, XCI, another Canadian-based ETF is down quite a bit. A lot of the Canadian ETFs are going to be down, right? Especially if you bought them recently. Power Corp is down -2%. CNQ has done well. Oil and gas has done really well. I missed, pretty much all the other Canadian stocks not doing so well. Oil and consumer Canadian stocks have done actually decently well. Canadian Tire down a little bit, and then Dollarama up 7%. They've seen a nice little jump since their previous earnings report. So once again, guys, just a quick little update of all the total return of the individual stocks inside a portfolio. And the last little account I'm going to show you guys is going to be the total return of all my Wealthsimple accounts. This includes Wealthsimple accounts that I've opened and closed, and since I first started investing in the beginning of 2020, or actually 2019 was when I first started. So in terms of 2019 all the way to today's current date, here's the total return of all my accounts, as well as any stocks I sold and whatnot. So we are up about 27%. It was a little bit higher, but the recent dip kind of pushed it down a little bit. So it's about $24,000 in total inside all of my own personal accounts on Wealthsimple Trade. So a quick little update on our plans going forward towards the end of September as well as the beginning of October. I've taken a little bit of time off, as you guys probably have noticed. I haven't published as many videos as I usually do. I take a little bit of break from things, and it's been really nice. And with the markets kind of doing their thing, going up and down and dipping for the most part, we've kind of just kept things simple. We've kind of just placed our portfolios the way they are, kind of keep the stocks, our current allocations, and we're just buying them on a regular basis, keeping things nice and simple, and it's kind of working out pretty good for us. And going into October, I'm not too sure how busy I'm going to be on the channel. I'm definitely going to be taking some time off in October as well, but nonetheless, I haven't done a video for a little while, so I thought it'd be a good opportunity to give you guys a quick little update and show you guys, when things are going the way they are, to just be consistent, keep working on things, and you guys will surely have success. So anyways, guys, take care. Hope you guys enjoyed the video, and I'll be seeing you guys in the next update. I'll probably publish an update next week or the week after, once again, just to show you guys how things are going. And regardless of what the market is doing, just keep on, guys, keep on it, keep working hard, and you guys will have success. So anyways, guys, that's it for today's video. If you guys have any questions, let me know in the comment section, and I'll try to get back to them, even though I've been pretty busy lately. But anyways, guys, thanks for watching. Take care, have yourself a good one, and I'll see you guys later.